So, good morning, everybody, and thanks to Nick and Afore for setting this panel up, which I think is very timely, and also for ensuring such a nice bridge to Jose Manuel's speech. You entered your observations with a fair amount of observations about FIDA, which I think make eminent sense, also placing it a little bit in a kind of broader strategic context, which I think is also a good way to start, at least. So I'm very pleased to have on the panel here today a very eminent panel made up of both representatives of the Parliament, Regina Doherty of the EPP group, of course, who will play an important role going forward as a shadow rapporteur for the EPP and the FIDA negotiations, which are entering a critical juncture. We have a Mr. Simonas Krepsta from the Lithuania Central Bank as well, which is very welcome. We get a kind of a supervisory central banking kind of public sector perspective on data sharing in general and FIDA in particular. We have, of course, Christopher Schmitz from Ernst & Young, who is also kind of bringing a kind of a broader perspective from your consulting kind of ground and kind of having a broader overview of the various entities involved and how it will all work out in practice, the kind of practical questions, which obviously at the end of the day do pop up. And of course, last but not least, Cohen Terbal, AFME, who will be able to mention a little bit where we come from in terms of the kind of the financial sector perspective and the like. Of course, as the Commission, we have strong views about FIDA as well, unsurprisingly, but today I'm here as a moderator, and I'll try to stick to that role. So without any further ado, what we thought could be useful is to connect perhaps to some of the themes that Jose Manuel mentioned in his speech, which is the kind of broader strategic discussion. In this town, obviously, we always have a tendency to dig into what is on the table now, which is obviously, hopefully, I would say, the trilogue negotiations. But before we get there, bear with us and perhaps have a little bit of a first exchange on connecting a little bit back to this kind of broader strategic vision. Data sharing, data as a kind of important input and output factor to some extent in the new kind of digital economy. What do we think about data sharing in finance? What is the interest for people, consumers, firms, and the broader financial sector in that respect, and what you see as the kind of strategic imperative? We heard a little bit of Jose Manuel's take, especially I think a call to the banks to kind of see it a little bit from a kind of a strategic focus as well. Data sharing is kind of a way of getting ready for the revolution which is unfolding, notably in kind of AI terms, in a sense. Is that the perspective you see? So perhaps without any further ado, starting Regina, from your perspective, as a kind of a legislator, how do you see data sharing in this kind of broader context and from a financial sector viewpoint?
Well, thank you, and good morning, everybody. Thank you for the invitation to be part of the panel. I've moved in the last maybe 6 or 7 months from when I arrived here thinking that this was probably more regulation for a sector that isn't hugely innovative in the first instance, and given that we'd been talking a lot about the overburdensome nature of where we are, I think that probably started my journey thinking about this. But to answer your question specifically, data is the new king. So years ago we talked about cash being king. Data is absolutely the central ingredient to creating innovation, better products, and better outcomes for the consumer. So now I've come along the spectrum to know that the sharing of data is what's going to create the innovation, and it's the level playing platform that we're trying to create to make people who maybe historically haven't been very innovative, to allow them to see the benefits of actually sharing that data and to be able to become global players, European companies, European industries, to be able to become global players in that digital space, as opposed to us being fearful of the global players coming and taking our market share. And so what's really, really important, but also very exciting, is that when we do create this new platform and innovative culture, then the innovation will come. But there's a couple of small concerns maybe that I think we need to address during the trilogues, and to my mind they can't start any sooner than they should. We really should be getting on with it, and I welcome the statement this morning by the Commission. We need to ensure that we mind people's data, so that our data is very, very precious, and particularly in the new world of where personalities can be stolen and all of the negative impacts that come with that. We need to be ensuring that the data is precious and that it is minded, and that it is absolutely respected. And all of the schemes and all of the scheme players make sure that they uphold that kind of central tenet, is that we mind the data. But second of all, we have to make sure that everybody has the opportunity to be innovative, not just maybe the larger players that maybe do see the benefit. I think it's interesting what Jose Manuel said is that we need to encourage the banking sector to understand the opportunities that are here, not to be protectionist, you know, in protecting their own corner, because there are enormous opportunities. And so I'm looking forward to the trilogues. There is obviously different opinions between the Commission, the Parliament, and what's going to come from the Council. But ultimately, at the end of the day, what we will develop, and hopefully sooner rather than later, is a respectful sharing platform that will encourage people to be innovative, to create better products than they currently have, newer products than we don't even know exist yet, to involve marketplaces in other marketplaces to create competition, and ultimately the consumer at the end of the day will get a better deal.
Thank you very much. Very clear. Now, Mr. Krebster, from your perspective, also the public sector, from a supervisory perspective a little bit, how do you see the kind of a strategic, what kind of strategic view do you take of data sharing in finance? And yeah.
So obviously it's a great potential. It's a new king or new gold or new oil, whatever the name, but the potential is there, obviously. I think what is really important is to also focus on very kind of practical things. So what's the general idea? Of course, it's the more integrated and more competitive financial sector. But what does that really mean in practice? That means cheaper and better financial services for consumers and an opportunity for the best financial companies to acquire more customers, to grow, to be more competitive. And here we have quite a journey in both on both spheres. You know, the market capitalization of the largest U.S. banks is 10 times the size of the largest European bank. Financial services and the ability to choose financial services is also more widespread in U.S. So we need to cover that distance. And then I think what are the cornerstones? I think it's very important to focus about client mobility and cross-border financial services, because these are the things which are still kind of red tape and barriers in Europe. We made a survey in Lithuania, and we see that at least 15% of bank customers, they are thinking about changing the service provider, but only 1 or 2% really do that because it's too difficult, too expensive. The data is not shared on an easy way. Cross-border financial services, again, quite little amounts. It's very localized still on the national level. So I think looking in terms and finding new ways how this data sharing could help on this to increase the mobility of customers and cross-border financial services. For that, I think it's very important to have a very close dialogue between market participants and public sector in trilogues, in regulation, but also in a very practical sense. Again, an example from the PSD2, when we had the open banking initiative. We, as a supervisor, we try to work in 2 directions, supervisory direction, but also market catalyst, because we need to have the API, standardized API, which is available, clear for both, you know, major banks, but also third parties. And now we have 2/3 of all the e-commerce payments are in Lithuania. They are done not by using cards, American cards, but payment initiation service, which is quite an achievement. So if we can achieve something like that on the open finance, it's more complicated. It's much more services. It's unstructured data, but I think it's very important to work and have a very close dialogue between major financial institutions, public sector, third-party providers, and going very concretely, mortgages. How can we increase the mobility and cross-border provision of mortgages, pensions, insurance. These are different markets, and then probably obviously different data, different APIs, and we really practical and focus on how we can, at the end of the day, achieve better services for consumers, but also opportunities to gain competitiveness for the marketplace. And very much agree what Jose Manuel said, that it's also strategic opportunity, even for largest players, largest banks. It's a strategic opportunity, and we saw that again in open banking. Of course, major banks, they were most resistant to opening up the accounts for payment information, payment initiation and account information services, but then they also saw that they themselves can access accounts on smaller banks, and then that facilitated the journey.
Thanks a lot, Ms. Krebs, also for kind of putting it in the broader context of the ultimate end goal, perhaps competitiveness, client mobility, competition, and the like. Now, turning to you, Christopher. We've heard a lot about data being the new king, the new cash, the new gold, and kind of strategic opportunities, the potential impact of data sharing kind of affecting competitiveness at the end of the day. What's your take? Is this kind of strategic journey for the financial sector, from your perspective, as kind of an institution that advises the financial sector on how to position themselves in this transformation process?
Yeah, I think it's a journey. So when the first draft came out in June 2023, first of all, most of the institutions we were talking to didn't even recognize it was there. Then they kind of found out it is there, and then it went from a state of, I would say, shock and awe, or what is this actually about, into a state of denial, which some of them are still as we speak. While many of the bigger ones that have also the capacities to use the financial data exchange to the best extent of their clients are moving now into the view of, yes, this is actually a strategic opportunity. But we have to leverage it. And of course, there is still, I'd say, across EU, a decent amount of not harmonized products. We see that in insurance specifically. Banking may be a little bit better. So, and the banks, by the way, going through PSD2, have embarked on that journey of APIification of their business very early on. They really are kind of taking this also as an opportunity now, although we still see lobbying against the regulation. So from my point of view, what we need to do as an industry is kind of embrace the opportunity, really go there, understand what can we do better for our clients, regain the loyalty and the trust of our clients also in the digital space, which is something that data exchange will facilitate going forward. So this is like something that we've seen. We've done probably about 50 workshops now with clients across Europe, and there's a huge diversity of how they see that, but many of the bigger ones actually embarking on the journey. And what we also see, this is the FinTech and Regulation Conference, right? We see that some of the more innovative players in the FinTech space, they also embarking on the journey quite intensively, because they see this as a big opportunity to get access to much more data, to make the onboarding of clients much more seamless, make it more efficient, and then also create journeys for the customer that will help him manage his financials. I mean, the biggest and kind of in the room, elephant in the room, is the financial home, which will help clients to be better educated, to be better consulted, to have a better choice of financial products. And the one that will finally embark on this journey early enough and will embrace this opportunity will, in the final stage, also be a winner of what we're seeing.
Thank you very much. That's very interesting. It connects a little bit to something that Mr. Orte said at the beginning, which is a little bit big and small, in a sense, a sharing framework that works also for the small, perhaps not surprising, but the big are the first ones to consider things, given also the kind of experience and also the acumen. But we'll get back to that theme later on, I think. Now, turning, of course, last but certainly not least, Koen. Now, from a financial sector perspective, you've heard a lot of the kind of call up from some corners to kind of also consider the strategic opportunities. I think we heard about this process, which is going from shock and awe to denial to engagement. In a sense, I don't know exactly where you stand in that in that process, but maybe you recognize yourself or you don't recognize yourself. But no, more seriously, a little bit on the there's obviously a degree of data sharing happening already today, and as we've heard also from Jose Manuel and others, there's obviously open banking as well, which there's a fair amount of experience already. How do you see the kind of strategic opportunities stemming from data sharing in finance?
I've been working on FIDA for quite some time, so I've gone through all the stages of grief or otherwise. And I think indeed that it is viewed on the whole. Of course, there are different views on this in the financial sector as well, but I think on the whole there is indeed a view that this is a strategic opportunity. Of course, that means it has to be done in a way that is sensible, etc. We talked about competitiveness and all of that, and I think we'll get back to that. I do think it's good to sort of start off this discussion, as you did in the beginning, by saying, let's look at it from a strategic perspective, because very often in Brussels and elsewhere, we sort of get focused on the regulatory minutiae, as you put it. We get focused on perhaps sort of a more siloed approach in terms of looking at financial data sharing and FIDA. But I think it's very good to take a step back and say, okay, what are the objectives actually? What is it that we're trying to resolve? What problems are we trying to resolve in the market? And what is the best solution for that? And I think if we do that, very often we might end up not just with the solution that we're looking at, but other solutions as well. So for instance, one of the objectives that's often mentioned is financial innovation. We want to enhance financial innovation, and data can indeed play an important role in that. But when I look at that, I say, well, the sort of the cutting edge of financial innovation may come not just from financial data sharing, but particularly also from alternative data, right? So not data that is not traditionally thought of as financial, whether that's IoT data or social media data or satellite imagery or geolocational data, energy data, whatever it may be. I think the real innovation will come from financial entities and fintechs, etc., being able to access that data and combine it with the traditional financial data that they already hold. And so our focus, obviously FIDA is very important, but I think also it's important to have a focus on how do we build a cross-sectoral, horizontal governance layer that enables that data to be shared across industries. Similarly, with FIDA and with other types of regulation, we're talking about the sharing of individual data assets. But a lot of efficiency and innovation can also come from the sharing of data sets, whether that's through federated learning or in other ways. And obviously that has to be voluntary. Obviously there's competitive issues and privacy issues that need to be addressed. But I think we often talk about the AML use case or the fraud use case in this regard, but there are other use cases as well, the sharing of operational data, metadata, etc., that can really create efficiencies for the whole industry. That is something where I think public-private collaboration is very important in order to achieve that. Another example might be the objective of market transparency, right? Enabling consumers to better compare products. Is that something that, should we be focusing more on product data? And of course, there already are industry initiatives in the insurance industry and elsewhere that focus on standardization of product data rather than a focus on just client data and risk data. So I think, indeed, taking a step back from FIDA and saying, okay, what is it that we're trying to achieve? What objectives, strategic objectives do we want to achieve? And what solutions would best fit those challenges and those objectives, I think is very, very important. And I think we have an opportunity to do that today and hopefully also in the next few months as FIDA goes into trilogues.
Okay, thank you very much. I think from this first exchange of views, I think we can see a fair amount of agreement in terms of the strategic imperative of data sharing, subject to nuances, of course, and kind of, I think, as you just said, making sure we get it right, and also that there may be bigger questions out there within which FIDA is an instrument to achieve a certain outcome. You linked it back to, I think, the kind of the broader objectives of competitiveness and the like. And I think you also mentioned the kind of ultimate aim of ensuring customer client mobility and kind of integration, market integration and the like. And I think you also then stressed yes, finance is one area, but there's obviously many other areas, and the ultimate interest, at least from a financial sector perspective, may also be to get access to a broader range of data. And Ms. Doherty, you made the kind of view of yes, the need to also think about how it affects the market in terms of small and big firms. So now operating a little bit, coming down from strategic heights and moving on to what I think Koen mentioned as labeled as the minutiae of what of a kind of the town. We heard the commissioner this morning that indeed, from a commercial perspective, we were very eager to move into trilogues. I also took it from Ms. Doherty that the Parliament also seems to be moving in that direction, so that's very welcome. And now thinking ahead of trilogues, of course, and I think all of you mentioned that, yes, strategic imperative, but we need to get it right. Perhaps, Koen, you were last on the first one. Perhaps you want to start in terms of what do you see as the kind of the main things that we should now focus upon as FIDA enters into the next stage of its kind of negotiation journey, i.e. trilogue negotiations.
Yes, thank you. I think it's been mentioned a lot already this morning. I think it's really important that the EU and the Commission has indicated a real focus on competitiveness, on innovation, and I think in the context of the European financial sector, that means, and you mentioned it, the competition and with American and other counterparts is quite fierce. So I think really thinking about competitiveness requires sort of two things. In the first instance, it means enabling European financial entities to access and deploy new innovations, new technologies, and to scale them. Now that is maybe one area. And the other area, I think, is when it comes to implementing regulation such as FIDA, I think we need to look at, okay, again, what are the objectives that we're trying to achieve, and how can we achieve them in the most efficient, sensible, etc. way. With FIDA, I think there's a good opportunity now as it goes into trilogue to sort of maybe take a step back and think about how we can do that. And just a few examples that I think should be considered is, for instance, if you look at the client scope in FIDA, right? So again, I look at FIDA and say, what is the objective? Well, one of the key objectives, I think, is the ability for customers, basically to enhancing the bargaining power that customers have vis-a-vis financial entities when it comes to access to data and sharing of data. I think that's a key objective. If I go to my bank or my insurance company, it may be quite difficult for me, and I say, well, I'd like you to share my data with entity X, Y, or Z. That may be a difficult conversation, right? I may not be able to convince them of that. But if I'm and the same is true for SMEs, etc. But if I'm a large corporate or a financial institutional client, that is quite a different conversation. Indeed, very often there are bespoke arrangements in place with financial entities about access to data and sharing of that data. At the same time, if you look at retail clients, obviously they consume much more homogeneous products on the whole, and therefore the standardization of that data is much more straightforward in a way and much more cost effective. Compare that to wholesale clients, to large corporates, to large financial institutions. Those types of clients tend to consume more heterogeneous products, more bespoke products, where the data standardization is more complex or at least less cost effective. So if I say, okay, if the objective of FIDA is enhancing bargaining power of consumers or certain groups of consumers, and that mainly applies to retail clients, and at the same time, from a cost effectiveness perspective, the standardization of data for those clients is more cost effective, then let's look at limiting the scope of the FIDA regulation to those retail clients, because that still allows you to achieve the key objectives, but in a more sensible, more effective way, so to speak. And to the credit, I think that's what the Parliament has done in its text as well. That's also in line with, for instance, the PSD scope. So I think those types of solutions are very important. Similarly, the schemes, which I think is a really great regulatory innovation in FIDA, really enabling the market to carry the weight, so to speak, of implementation, make decisions around specific data attributes, compensation, etc. I think it's incredibly important that we put a lot of the emphasis on the schemes to make those decisions and make it really market-driven. And that also means if we're going to make data subject to mandatory sharing, let's make sure there's demand for it. Right? Let's make sure that there's an actual market for that data out there. Let's do a proper impact assessment. And when it's decided, as I said, that yes, this data category should be subjected to mandatory sharing, then make sure the schemes have a very important role in implementing that. These are all ways in which we can, make sure that FIDA achieves its objectives, and also in a way that allows, from an implementation perspective, also takes into account things like the competitiveness of financial entities.
Thanks, Koen. A lot of things there. I think you mentioned, you've already started to touch upon two key items, scope and schemes. Now, from your perspective, in terms of schemes, we heard from Koen that if I heard you right, that you very much welcome the fact that the kind of delivery of the schemes, in a sense, is a market-driven solution. But I also take it that maybe I'll let you come back later on this one, but perhaps some more guidance from the legislator might be necessary or desirable in that respect.
Yeah, I think sort of a two-stage approach is important. So you need to have an initial assessment, and that can be done by the Commission, can be done by the ESAs, it can be done by the regulators, is to say, okay, do we actually see a market for this particular data category? Obviously, we know there's a whole long list of data categories that might be subject to FIDA. Let's have a look at whether there's actual market demand for this. So that includes including market stakeholders, of course. Once the decision is made, and that may well be a regulatory decision, that yes, this category should be included in the FIDA scope, or should be activated, so to speak, then I think a lot of it, the actual implementation should be, as much as possible, handed over to the schemes, and to make sure that it's implemented in a way that's effective and efficient.
Now, Christopher, in terms of the schemes, I understand that from a lot of your engagements with industry and with stakeholders, there's also a fair amount of questions around the schemes. Do you share the kind of generally the positive view of Kohn that yes, it is for the market to deliver, but do you think that there's what are the kind of conversations you hear around the schemes and the kind of key feedback you get, and what would this entail for now the negotiations moving forward, in instance?
So I fully share the view that was mentioned, that the schemes are central to making this a success in the end. We also know that scheme building is a process that normally takes a long time, and we've seen industry schemes surfacing in 2 years, in 4 years. I think definitely the current discussion is not at a level where the industry knows how to organize that. So is it on a European level? Is it on a per country level? Are we talking about 3 schemes per country for 27 countries, which totals to 81 schemes? Is that something that is efficient for the industry? Is that something that is efficient for the data holders, but also for the data users in the future? So that discussion is only starting as we speak. And there's, I think, a big reluctancy at this point to embark on journeys which are more from a European level, because it's also very difficult to get across the different markets and all the different product sets to have harmonization, because we know in some of the industries, like in insurance, there is a lot of local diversity. So I think there's different stages of discussion in the different parts of the industry. We've been discussing with the EBF, for example, on how could that be organized on a European level. But this is very early stages, right? So I think what would be helpful, besides the demand-driven view of use cases and regulation of data sharing only for pieces which actually have demand in the market, I think it's also about giving some guidance, maybe also from the policy side, to say, how would you like this to be organized? What is a good way of, or sound practices of creating that, hopefully on a more European level? Maybe then with local specifics being added, that's fine. But if you can't organize that on a more European level, I think it's bound to fail. Because in the end, the cross-border integration that was also mentioned, if you have to be as a European provider a member of 50 schemes, it's just not manageable, right? So if from our point of view, and the discussions that we are leading is very early stages, I think reluctance on certain industries to move that way on a European level, because the task is huge. I mean, fully agree. And also the timelines to implement, as it's currently in the regulation, are very, very short. But from my point of view, it's a key success factor of making this data sharing exercise, let's say, something that helps the industry move forward and finally create customer impact and value add.
Thanks, Chris, for that. Now turning to Simonas, cross-border schemes. You mentioned cross-border already at the outset as a kind of imperative to get the regime right in that respect. Now turning to the kind of key themes which are on the table now here. You've heard some of the views from a supervisory perspective. What do you think now could be done in negotiations going forward to address questions that we hear around the balance between kind of outsourcing responsibility to the sector, while at the same time giving sufficient guidance about what the end objective should be?
I think the key in finalizing this regulation is finding this right balance, because one goal is obviously to foster innovations, which is horizontal, and we are not certain what kind of innovations might come up. So we need to talk about some kind of first layer data exchange, some basic things, which could foster innovations. We don't know yet. So it's hard to have a scheme on uncertainty, That's one thing. But then there are products, there are mortgages, insurance, and there I think we can have this T-type strategy, the first layer and then deeper into different products. And then, of course, having in mind the ultimate goal to have better services for consumers, better opportunities for companies to grow, and what kind of more detailed data exchange could have real life applications. I also believe very much on that. And then, of course, again, ideal would be a cross-border scheme. Obviously, it's totally agree. It's not possible. You 27 multiple different, and banks, they provide, mortgages, they provide insurance, they provide different products. So it would be really unmanageable to have this, number of schemes. But again, one example from Lithuania. We introduced the mortgage refinancing regulation, very simplified. The client just go to another bank, gets one number, the interest rate, no costs, and of course data sharing is key. Without data sharing, it's not possible to have that. But it's not only data sharing; it's also the legal framework. It started from the 1st of February, just a few days ago. But over the last half year, mortgage margins went down by 45%. So 45% down without any new market participant. Just because market concentration is obviously big in a small country, but because banks preemptively started to work with their clients and offer better rates. So I think the focus, T-type strategy, focus on different markets, different products, and trying to combine. And it could be a very good snowball effect. This data sharing arrangements comes from European level, then maybe from national level, some other regulatory initiatives comes from, because on the mortgage you have all this ecosystem with notaries, collateral and different things that's very difficult to coordinate on the European level. So both directions meet somewhere on the sweet spot, hopefully.
Hopefully. Now we're approaching the end of this panel, but obviously we've left a key player to the last. I mean, Ms. Doherty will obviously be a key part of the negotiations going forward. And we already know the positions of the Parliament, we already know the positions of the Council, and we've exchanged on some of the themes where you can see perhaps differences between the two legislators. What do you see as the kind of key themes now that you will pay attention to going into the trilogues, and how any reflections on what you've heard here on the panel today in terms of, in particular, the kind of the market-led approach to achieving technical interfaces by means of schemes, etc.?
So the first thing I think we need to acknowledge is the timelines. It's interesting that Christoph said 18 months is just not feasible, and it would frighten, the life out of any serious player to try and have to assume that regulatory burden, which there will be within 18 months. I think the Parliament's position of 5 years is a little bit more realistic, but it's also still ambitious. That's the first thing I'll say. Second thing is that we need to get the scope right, so that we include all of the players that we want to include, but that we don't include people that it will be then become a major regulatory burden for them without any sight of innovation or new opportunities in them. But those people that do potentially maybe want to opt in, that might fall below the scope level, I think we should help them opt in if they want to. And then I really do agree with other colleagues here this morning when we talk about cross-border schemes. I think it's really empowering that we're going to allow the schemes manage and maintain and deliver and determine, how they will work themselves. But any notion that a serious player could be in 27 schemes or 81 schemes, it's just absolutely will kill any spark of innovation. And so we really need to be really careful and clever that the schemes are managed to allow allow the client mobility, to allow the service mobility, but also to really, really foster the innovation, so as not to get burdened with what initially maybe people felt in 2023, that this is just another layer of regulation. This absolutely has to be about innovation, and we really, really have to be careful that we get the scoping, the timelines and the management of the schemes right to allow that innovation to foster.
Thank you very much. I think these are very good words upon which to conclude this panel exchange. I would like to take the occasion to thank the panel participants, and will not try to do any kind of summing up as such. I think it was a good reflection of a debate that is out there on FIDA. I think it was very timely to hold this conversation today as we are approaching trilogues, to reconnect a bit with the strategic underpinning of a proposal, but also touch upon some of the key issues that are likely to be focus and be head and center of a trilogue negotiations once they start. So big thanks to my panel participants and for the discussion had.
Thank you.